Yeah, thanks for having us, Tim. If we can roll forward 2 slides to slide number 3, please, we'll start there. So we'll just go through today a quick run through of our AGM presentation, which we published last week. Just as a general introduction for those not familiar with Barton Gold, what we've done is basically gone into South Australia and consolidated the substantial majority of a significant historical gold producing district. So what's very interesting about South Australia as well, Western Australia and the eastern margin of Queensland get a lot of attention. South Australia is actually very well represented for gold mineralization. So it holds about 25% of Australia's total gold reserves and resources, but represents only about 2.5% of production. So we spotted this a few years ago before sort of the return to investment interest in gold. We've consolidated nearly 5,000 square kilometers in tenements there. Within that, we've built a 1.1 million ounce resource base, and we also own the region's only gold mill. So in a sense, where we are starting this story, having just listed about 14 months ago, where we're starting the story is often where most people are trying to get to as an explorer. Now, the opportunity for us here is moving forward to use this platform as a significant growth basis. We think we've got a very strong basis to build a multi-million ounce development platform. Our ambition is to become South Australia's largest independent gold producer and essentially to become the regional leader in gold in this area of the Central Gawler Craton. So we've got a very clear and focused strategy here. We're not focused in other jurisdictions. We're not focused in other metals. Extremely well capitalized. We've got $10.3 million in cash, and we have a very, very strong operational and leadership team. Next slide, please. So when we look at the projects, it helps to sort of break these down in terms of the sort of spatial analysis. And what we really have is sort of a northern hub, which is an infrastructure hub, and our southern hub. And what we're really looking at doing is leveraging these foundations for growth. Where we're focused from an exploration standpoint is this southern hub. So this is the Tarcoola Project and the Tunkillia Project. Currently about 2,500 square kilometers of tenements. We're the first people to own these assets together. We're the first people to do a lot of new technical work to basically map out repeating regional structures, and the first people to dedicate essentially a $15 or $20 million budget to exploration here. We're looking for open pittable shallow mineralization. And what we can do using our northern hub, where we have an existing mill, is actually leverage that for stage 1 operations using ore from our Tarcoola project, which processed through that mill back in 2017 and 2018. Next slide, please. So that, the key questions for us, really, or the key questions we get is, well, what have we been doing since we IPO'd in June of last year? Our exploration approach is driven by the application of a lot of new technologies. We're essentially taking an area that was left behind in the 1990s. There was a very, very great deal of excitement during the discovery of both the Challenger asset and the Tunkillia asset, which we now own both of. We're applying a lot of new technologies to essentially accelerate this region by 30 years from out of the 1990s and into the 2020s. We've had a lot of early success since our IPO with this methodology. We have very efficiently spent capital. We have identified 4 new gold zones in that span of time. So that's a total of over 2 kilometers new mineralization. One of the things that does set us apart from peers is we actually have sources of income. So we've had over $2.75 million of income during this time. We've been granted almost $1 million in grants by the South Australian government. And we've also built a very strong leadership team in Adelaide, in a new Adelaide headquarters. So very, very focused on leaning into our advantages in the region. Presently, we have major drilling programs underway, which will be driving towards a resource update for these assets for March 2023. So in essence, what we have done is gone back and built a very strong base for a long-term strategy. We're essentially laying foundations for long-term, large-scale gold development in the Central Gawler Craton in South Australia. Next slide, please. So a quick snapshot here before we get into the projects. We have a very tight capital register, relatively constricted amount of options on issue that are incentive options for management. A couple of key takeaways here. We have a very, very strong board and management alignment with shareholders. We are you and you are us. So This is one reason we focus on being so creative with the assets that we have in terms of monetizing them, extracting value to offset our expenses. Our board of directors and our management team reflect our forward ambitions as a large-scale developer and operator. Together, we have an aggregate experience in financing, developing, operating assets, which is quite unusual for what people might see as a junior explorer in the space. Next slide, please. So just jumping into the assets here, we'll start with Tarcoola and the sort of the northern of the two assets in our exploration hub. So Tarcoola was actually the site of the South Australian gold rush in the late 1800s, at the same time as the Kalgoorlie gold rush. So during the first 50 years of the 1900s, about 77,000 ounces were produced there at around 37.5 grams per ton. And then the open pit there, the Perseverance mine, produced about 3.8 grams per ton ore during 2018 to our mill. So surrounding this, we have EL 6210, and much of this has been untouched since the 1990s. What we've done is come in and map a lot of new structures using new geophysical technology and modeling. Next slide, please. And if we start with the open pit, what we can see is the pit itself there was actually a very shallow pit. So it was only developed to about 30 meters depth in the north and about 70 meters depth in the south. And we came in and drilled some test holes to depth and along strike there. And what we discovered was sort of a 200-meter extension to depth of that mineralization underlying the pit. But also, and perhaps more importantly, we identified an entirely new gold zone immediately adjacent to the pit, and that's the zone there labeled Perseverance West. So this is a separate subparallel set of structures with multiple mineralized horizons, starting essentially from the edge of the open pit and very shallow. So there are real opportunities just with this pit, and you can see the types of drilling intercepts we get both in the Deliverance target to depth as well as Perseverance West. There are real opportunities just for a simple open pit extension there into high-grade material. But the really big picture with Tarcoola does in fact relate to the big picture. So if we can go to the next slide, I'll show you what I mean. On the left here, we have an image that's about the size of our mining lease there. So this is an existing mining lease, all approvals. We can operate it tomorrow if we want. And then the left side of that is the open pit there. We've mapped out 3 different areas that we think have similar structural and mineralogical characteristics of that open pit. So we think this has potential to actually host, multiple 50 or 100,000 ounce open pits in a small cluster. But what is more exciting is the work that we did both pre-IPO and post-IPO, and this is what you see on the right of the screen. What we did is we actually brought in HiSeis and reprocessed all historical seismic data, and we mapped the Perseverance shear passing down through what's called the Tarcoola Formation. And it passes through that, which is that sort of brown chalky line you can see beneath the Perseverance open pit mine dot, and it plumbs directly into one of these large granite intrusives, and this is a granite intrusive of the Hiltaba suite. So the Hiltaba intrusives are those engines of growth, a source of heat, pressure, and fluids that actually drove mineralization throughout the Gawler Craton. So this is the sort of genesis of Prominent Hill, Carapatina, and these types of major known assets. The same drivers are underneath our project area. And so it's very interesting for us to work out, okay, we've now worked out what was driving mineralization, we worked out where it came from, and now we know how it came up and parked right in the Perseverance open pit mine there. What is more interesting here and the exciting thing for us is that we, as you can see in this image, we have identified a dozen or more parallel and cross-cutting structures, which are perfectly analogous to that shear zone, which have never been mapped, have never been drill tested, with the exception of one, which is Warburton. Warburton is about 5 kilometers west of that open pit. And in 1997, AngloGold drilled a hole there and intercepted about 16 meters at 3.5 grams per ton, essentially from surface. And often people ask, why wasn't that followed up? And the answer is quite simple. In September of 1997, the US dollar gold price was about $325 and falling. So, it wasn't a very attractive target for an AngloGold at that time. But for us, we now have a bit of a better understanding of, where might the fire be. There's always been smoke here, but nobody's done the work to actually find major structures. So this is very exciting for us, and we think that means there could be potential to have essentially several clusters of shallow, high-grade, open pitable assets. And so if you have multiple high-grade sources of mineralization in smaller pits, what you'd really be looking for is a large-scale base load source of mineralization with which you can combine those to have a really powerful, really profitable, large-scale long-term development. And that's where Tunkillia comes in. So if we can go to the next slide, we'll address that. So this slide shows us Tarcoola and Tunkillia in relational distance to one another. So they're only about 70 kilometers apart. And functionally, they are the same project from an operational standpoint. So what we are looking at Tunkillia, though, is a very different geological domain. So we're looking at large-scale, continuous Kalgoorlie-style shear zone systems. We have about 50 kilometers of strike on our tenements, and where we're focused in the first instance is in the northwest corner of our tenements. That's where we have our 223 deposit. When we acquired it, it was about a 560,000 ounce deposit. We tore it apart and reanalyzed it, did a lot of work, upgraded it to about a 965,000 ounce deposit, and it's 2.5 kilometers long and open to depth and strike. Around this, we have identified 3 new gold zones in the last 12 months. And what we really demonstrated is that this project and this shear zone has a substantial endowment, which is much greater than previously understood. This is where we're working hard, really hard to drill for a major resource update now. Next slide, please. And this slide shows us exactly what I'm talking about. So here you can see the footprint of that 223 deposit, about 2.5 kilometers long. We found the Area 191 and Area 223 North gold zones using new geophysical predictive modeling, which is only just recently available. We drill tested those and validated both the existence and orientation of our targets last year. This year, quite recently in September, we announced the discovery of Area 51. Area 51 is very exciting because if you consider the 223 deposit of footprint and maybe 223 North and Area 191 might sort of be toes on that existing footprint, Area 51 is 3.5 kilometers away. So this is a distinctly different foot, which really demonstrates the growth potential inherent to this structure. Again, so we think that 223 deposit itself has considerable depth extension potential, and that's what we're drilling now, as well as the new Area 51 zone. The objective is to convert new resources for a resource update next year. Next slide, please. And all of that is happening only in the northernmost 5 kilometers of Tunkillia. So we think there's potential to actually extend this a further 20 kilometers down the shear zone there. Next slide, please. And this slide really brings it all together. For us, our ambition is to put together over 2 million ounces and to be producing 150,000 ounces per annum or more within 5 years' time. We'll do that in a 2-stage development. Stage 2 will see a new mill at Tunkillia, but we can use our existing infrastructure at the Central Gawler Mill, mineralization at Tarcoola to bring forward operations and generate stage 1 operations and cash flow, become a producer, become profitable, and have a much better financing position when we go to build that stage 2 mill. Next slide, please. So, the summary is we've got a very strong platform. We've got an excellent team. We're growing very, very quickly and very well capitalized. And we have quite a bit going on. And if we just go to one more slide, please. Really, if this story is something that could be of interest to you, we compare ourselves very strictly against those people who are our true peers in the ASX. So these are ASX listed, Australian domiciled, large-scale open pitable projects that are sub 1.3 gram per ton. And that's a very restrictive comp set. What you can see from this slide is there's sort of 5 or 6 people who are our true peers in that regard. Everyone else is in Western Australia. We're the only one in South Australia, and we're very, very attractively priced relative to this peer group. And that is before considering the fact that we are also the only mill owner in this group. So everyone else here has got to spend between $200 and $800 million to even think about production, whereas we simply turn on our mill with a bit of a workover. So a lot going on that we consider ourselves to be a deep value and growth play, and quite a few catalysts coming up for announcements soon. Thank you.
Thanks, Alexander. We're almost out of time. Just time for one question. There's a couple of questions online, if you don't mind answering them directly. But so a big picture question, kind of what's the end game objective for Barton Gold?
Yeah, look, the end objective really is that big picture of large scale development, and that when we talk about sort of producing north of 150,000 ounces per annum, really essential to that is taking advantage of large scale, cost efficient, bulk open pitable operations. And the reason for that is that can really drive a very high margin operation. When we look at companies like Regis Resources, Capricorn Metals, what we're developing at the Tunkillia Project is starting to look a lot like what they've developed, Regis at Duketon and Capricorn at the Karlawinda Project. So the efficiencies of scale are on full display at these projects. Capricorn is currently operating Karlawinda at less than $1,200 per ounce Australian all in per ounce. And so that's a very, very attractive target for us that we think is quite achievable based on the scale of what we're seeing here.
Thanks, Alexander. That's all we have time for. There's a couple of questions there. If you've got time to answer them, they're appreciated.
Absolutely. Thank you.